Volumes dropping, as I said earlier, almost 80% yesterday, 78 million shillings only going through the market. Really a victim of what we're seeing going on in equity markets globally. But some saying that the Kenyan market's still correcting after 2 years of surging prices. Others, I think you're of the opinion that the market is severely oversold. So if that is the case and you are of the opinion, can the Kenyan market withstand a global sell-off like we're seeing right now?
That's a very interesting question, and I suspect not in its current condition. I would say that many prices are in disequilibrium. We've been falling. It's been a momentum-driven fall. We're down 23% this year. Volumes have dried up. You know, CFC fell yesterday 9.6% on a dollar value of about $100 of transaction value. So we've really hit a point when it's very difficult now to judge where exactly this stops. And you know, what we're finding is there are not very many brave souls who are prepared to catch a falling knife at the moment. I think if you're looking at the Kenyan stock market now, you've really got to look through the election. You've got to be looking at 2012. And if you take that sort of time horizon, then I think you'll make some good and handsome profits. But near term, it's a casino, I'm afraid, and I suspect it's going to continue lower.
And of course, it all depends on what happens in global markets and whether the economy, with double-dip talks back in the market, whether the global economy and the developed world does go into another recession.
I think the developed world is teetering on the precipice, and I think the gold price is the best reflection of that. I think policymakers, in particular Angela Merkel, have run out of room, and essentially we're going to see Greece and a number of others have to pull apart. So we're entering a highly volatile period in global markets. The local market here has been very dependent on foreign investors. Those foreign investors are scattered now, and therefore I think, you know, the downside looks the right call still, I'm afraid, even after what's been a torrid retreat.
One stock that was an outlier on the bourse yesterday, REA Vipingo, that stock rallied 8% to 14 shillings 30 cents. Of course, the largest sisal fiber producer in Africa. We've got surging sisal prices on international exchanges. Also, the company reporting a strong first half result. Are investors just pricing in a solid full year performance?
I think, you know, most of these agricultural counters are very underpriced, so you do get these sharp moves. But I think investors are becoming increasingly aware that, you know, REA Vipingo made more in its first half than it made in any full year for the last 5 years. And underneath that business is actually a very good organic growth story. So I think investors will continue to pick that stock up. It looks very cheap, but for it to get some real momentum here, I think is going to be tricky given the overall market condition that we are facing.
Now, Precision Air is an airline that is looks set to list on the NSE. Of course, a lot smaller player than Kenya Airways, but it does represent some form of competition on the bourse, being the second airline to list. What do you make of this upcoming IPO?
It's going to list on the Dar es Salaam Stock Exchange, so it's not going to list here. Yeah. And Kenya Airways has currently 49% of its shares, and they're looking to reduce that via this IPO in Dar es Salaam to about 33%. They're actually more corporate. The Kenya Airways and Precision Air are cooperating with each other. They're not really going head to head. And I think it gives Kenya Airways a little bit of an exit, and at the same time keep some skin in the game. So I think it's a positive story for Kenya Airways. There is a big, I think there's going to be a lot of developments on the Kenya Airways front in the next 10 to 15 days. Now that they've announced the acquisition of these planes, they're going to have to go through with the rights issue in order to raise the capital with which to pay for those aeroplanes. So expect a lot of activity around Kenya Airways as well.
And that stock, obviously, one of the outperformers yesterday, eking a gain of 0.4%. Let's just move on to the currency. We see that currency continue to fall, almost sitting at 95 against the dollar this morning. The CBK coming out there saying they scheduled an unscheduled meeting for next week, 14th of September. Does it have any more tools in its kit in order to manage what we're seeing on the inflation and currency front, apart from a drastic drop in interest rates?
Yes, it's an extremely tricky landscape. I feel sorry for the central bank governor, who was in an almighty sweet spot all last year and then met this incredible turbulence. I think, the shilling, it looks to me as if the dollar is about to rally very sharply indeed. So I would not be going long the shilling right now, especially in the environment where the central bank is effectively saying we cannot tolerate high overnight interest rates. So you're seeing a sharp fall in the interbank rate as well. I'm not sure there's that much in their toolkit. I would have thought the most appropriate way forward would be to increase the CBR rate to something which makes a little bit more sense rather than 6.25, take it up to about 8%. But other than that, I think the central bank is more a passenger than the driver at the moment.
Let's just talk about foreign exchange reserves and the trend that we're seeing globally, and of course Nigeria yesterday coming out saying that they're looking to diversify at least 10% of their foreign exchange reserves into a Chinese currency renminbi, moving away from the dollar, which they cite as structurally weak. Would this be something that Kenya should also be looking at?
I think so. I think this is a trend, the start of a trend that's going to happen all across Africa. China's trade represents something like 30% of Africa's trade. And I think ultimately African central banks are going to have to move towards a 30% or 25% allocation to the Chinese currency. Nigeria obviously are stepping out ahead of the crowd, as Sanusi has continually done in so many different ways. But I think this is a trend we're going to watch unfold. For the Chinese, it's very restrictive. It's by invitation only, as it were. I think it makes perfect sense for them to be sending invitation cards to every central banker all over this continent, because Africa has turned its face east in a big way, and I think this would cement that process for the Chinese.
And of course, economic power shifting east, shifting south. Just let's move back to the equity market, and given the uncertainty and volatility that we could expect in the next few days, where would you be putting your money, or what stocks would you say are safe haven bets?
Well, I'm very bullish on gold, which I've been for a long time. I'm very bullish on food, so I would still be playing around in the agricultural sector, because I think, if this goes the way I think it's going, everyone's going to be looking for physical assets. And therefore, I'm looking for companies which have a strong balance sheet, where I think there's plenty of fat on that balance sheet. Those agricultural companies look to me a classic scenario. Otherwise, I would be looking at things like Kenya Airways, which are on a price-earnings ratio of 4, which is egregious. And I would be picking up a few of these very cheap counters. I thought Mumias's results were very good as well. The dividend yield is nearly 9%. That's a very handsome amount of interest to be getting, to be holding that stock. So I would be looking at sort of Mumias, Kenya Airways, some KCB. I think that's very cheap on a forward basis. And of course, Kenol Kobel, which I still think is a cheap share, notwithstanding the run-up it's had so far this year.